Peace, y'all, and welcome to In the Classroom with your favorite Sirrom. Today, I got a special guest from the linen side to go ahead and lace y'all boots. Matt.
Matt Falconer with Cross Country Mortgage, Santa Cruz local, 20-year vet.
Bam. And there you have it. So today, we're going to be covering the basics. I want y'all to be able to hear how lending works and the best case scenario for you to be able to go ahead and get your offers accepted and go ahead and get approved. And to get that straight from the lending side is really going to help improve your chances. And of course, working with any locals is always the best avenue. So stay to the end. We're going to give y'all some great content and some contact information so you guys can go ahead and get plugged in. So
yes, that's right. So having a local representative is underestimated sometimes because you really want to have someone who has a good reputation that can help you get your offer accepted. Working with someone who people don't know, it's like a little asterisk or a question mark. If the other side of the transaction doesn't know who you are or who we are, it's hard to get your offer accepted. So local representation is very big and something you should really consider.
Yeah, I've noticed that especially like when getting, working with clients and they have lending from another county. Mm-hmm. So, in Santa Cruz County, this is where I'm at today. It's kind of like the hub, right? It's a little bit more of a unique area, market area for sure. And so sometimes with lenders that are from out of the area, maybe even sometimes out of state, they don't understand the uniqueness. And so a lot of times, right, when you're going to go ahead and get a loan, you also have to get an appraisal done.
Yep. So
a lot of lenders have their own contacts. They have their own appraisers that they want to go ahead and do the job.
Yeah.
But if you've got an out of area appraiser, he doesn't necessarily know how to do mountain homes or homes that are on the river or on the beach side. So sometimes it's a little bit different.
Exactly. Or having the relationship with the appraisers that we've worked with dozens and dozens of times that we've handpicked for the transactions. Right. Who are favorable to us because we work with them so many times. It's nice to know the appraiser for sure.
Yeah, so having an appraiser who you know personally just kind of expedites situations when you have loans. And sometimes when you have a loan contingency and you have a short time and you're trying to pump it out and get the transaction closed sooner, it definitely helps to be able to have someone to be able to call up.
Definitely. I'm glad you brought up the speed factor because often the faster we can go is better for the sellers because they can move on and buy the house they want to do or get the money that they need for whatever their next stage of life might be. So the faster we can do the transaction, generally, the better for the sellers.
Right.
It lets them move on with their lives. So we've streamlined our processes where we can do loans in almost 2 weeks. Having a helpful appraiser that knows we need to go fast and who's already worked with us dozens of times really helps that process.
Definitely. So
appraisers take the longest time usually, so we do that first. When we order that first, go first. Being prepared to get all your paperwork into underwriting is the other thing too.
Right.
The whole thing with this is just getting prepared to buy a house. So we want to get your paperwork, which is income, W-2s and pay stubs, whatever that might be for that particular person. Being prepared is what's going to really help you write a winning offer, right? The speed that you're going to tell the sellers how fast you can go.
Exactly. Speaking of basics and first-time home buyers, where should someone start when they're on the beginning of their journey?
Good question. Great question. The best place to start is with a conversation with an expert. You can get lots of information online and get a little bit of information, but that's going to leave you wanting more because you won't really know if that's accurate. You'll get some basic generic information based on numbers that you typed in. But the lenders, we play by different rules sometimes. Sometimes I call it lender logic. They're very conservative and they're worried about getting repaid, so they do math in different ways than people might do it at home. 1 + 1 always equals 2 and stuff like that. But lenders have their own way of calculating income, and they work on different things. So a conversation is very important to have. It flushes out all sorts of answers and questions, and we can have a full conversation with low pressure and no commitment just to get some information to you guys out there on what it's really like versus like pushing a button and hoping you're getting good stuff.
Yeah, because that's something that I've noticed quite a bit in my journey and as my profession helping people on this side of the aisle is in general folks who are serious about making a home purchase, the first thing they do is they go out and they get approval. Mm-hmm. They go and they sit down with their CPAs. They sit down to find out their finances, their budgets. They actually go through these processes to really get a good idea of where they're at, what range they're really in. And then you have some of the folks who, they'll be online and they'll click some buttons and they'll get painted a picture that,
Yeah.
everything looks good. And so then when they get to me and we're out shopping doing our thing, and I'm like, cool, and then I want to connect them with the lender, then all of a sudden it just seems like there's a disconnect.
Right. Well, you want to be prepared, and that's the whole idea of this, right? Is get prepared, and if you're buying a house for X hundreds of thousands or X millions of dollars,
Right.
you want to be prepared, just period. That's it. And there's different levels of pre-approval. I can have a conversation with someone and talk about their income, talk about their credits, talk about the down payment, and figure out, and I can pre-qualify them just with a phone call.
Right.
And that's all, it's just a conversation. It's nothing that really is solvent. Next level of that is a pre-approval, right? We get your paperwork, some pay stubs, and maybe some bank statements, and do a soft credit check. That helps people, by the way. Now you're pre-approved. And there's another level too where we send it to the bank, you get full approval, and that's just where you're bulletproof. If you want to buy a house, the money is literally sitting there waiting for you. If you don't buy a house, you don't need to, but you are as prepared as possible, and you have all your questions answered. Any hurdle that might be in the way, we've addressed that and made sure it's not going to be a problem. That's the way people really should go if they're buying a house.
That's what you call in your industry fully underwritten.
Fully underwritten approval.
Right. Yeah. And I spoke on this in one of my prior videos. It's like, this is one of the, like how you said, this is basically money on paper, ready to go. And it saves you a lot of headache because you're doing all the work up front. So that way, when you're out there shopping, and then, we think about this too, like we're in such a competitive market with low inventory that if you're not prepared and you're not ahead of the game and you're trying to come in and piece things together, you're missing out on opportunities, or at least you're missing the home that you absolutely want to be in. And then you have to take second.
Correct.
Yeah.
And you're playing right into the seller's hand, actually. If you find a house that you want to live in and make an offer at, but you're not prepared, the seller is like, okay, I'll look at your offer, but you're going to have to scramble to get ready and maybe you have to just pay more because it takes you longer. Whereas the other side of that coin is you're already prepared. You are going to be just ready to go at the drop of a hat. You can go write an offer. And then the seller has to go, wow, this guy's prepared. They can go really, really fast. They know their numbers. And that's a super strong offer that any seller would want because it's just done in advance.
It really does expedite things. And because too, like as a realtor, I have to look at it from both sides of the table. Because if I'm representing a buyer, I'm like, how can I make our offer strong? Because in this market, we're having multiple offers coming in. So how do we make our offer stand out? So if you have everyone coming in around the same ballpark, number, but then you have this one person coming in the same ballpark number, but it's fully underwritten, that just speaks volumes to the seller.
Yep.
Because it's like, okay, like this is bulletproof. I don't have to wait for no loan contingency, none of that. It's ready to go right now, And I think that is a huge benefit. There's something else as well, like with down payment. So sometimes folks, they ask me, they're like, okay, well, how does the down payment really help a buyer, or is it for the buyer or is it for the seller?
The down payment is for the buyer. The buyer, some people think, I'm really glad you said that though. Some people think that their down payment is going to the seller. That's really just taking some of their person's money and putting it into equity. So you're really just transitioning dollars into your house bank is what I like to call that. So you're not lighting it on fire and it goes away somewhere else. It just goes into your equity, which is going to create you more wealth in the long run. You're basically diversifying from cash into equity. So you might have a little of both left or more equity, more cash. It's balanced.
Right.
Another good point is I'll tell some buyers, and because you work with sellers, I'll tell the buyers to put their hat on as if they're a seller and say, which offer would you rather have? Someone who's scrambling to get ready and isn't really sure of their numbers and needs a lot of time to figure their stuff out, or someone who's prepared and already has everything and they're like, boom, here's my offer. I can go fast. Here's the number that I feel is competitive for your house. Now you let me know. Whose offer is stronger?
Yeah. That makes a lot of sense because we look at timelines, you know. I mean, in Santa Cruz County, the last time I looked, the days on market was just about 30 days. But then in some other counties, say like in Santa Clara County, where I represent some buyers, the days on market is 15, 16 days. So homes are flying off the shelf depending on where you're shopping and wanting to really purchase your properties at. Is you have to consider both sides, and the way you want to get your offers accepted if you're a buyer is making it bulletproof, making sure you're 100% approved, you have everything checked off, because then all that's going to do is strengthen your offer as opposed to when these other folks come in.
Absolutely. You bring up another good point is if you can make an offer and it's a win-win situation for both parties, that's where success happens. It's when both parties are happy. The sellers have a right price, the buyers are cool with it, timelines are working for both people. You can be prepared to go really fast, and sometimes you need to, but sometimes people don't want to go super fast.
Yeah,
you have
true.
the option to go fast, but you might not need to. You have flexibility. You brought up another thing I wanted to say too, is right now, there's still very limited inventory, and imagine what is going to happen when rates go down, which they're supposed to. We're at a peak of interest rates, so rates are going to start to go down in the long term. There's going to be more buyers, which is just going to make that inventory problem even worse. So what do we think values are going to do? More buyers, values are going to go up when rates go down.
Right.
And we know that's about to happen because the Federal Reserve is doing things and they're about to stop raising interest rates. So overall rates are going down. And I read an article recently that said for every 1% in interest rates going down, something like 1 to 3 million buyers nationally come into the market. Now we're talking local markets and stuff, so those numbers are national. But if rates are supposed to go somewhere near 7 to somewhere near 5, nationally that's 6 million more buyers. And they're not building houses that fast, so that only just squishes the inventory problem.
Yeah.
Meaning value goes up, supply and demand.
Super, and it's super competitive. I'm glad you brought that up too, because when we looked just a few years ago in 2021 and 2022, that's exactly what we saw. We saw historically low interest rates, and then we seen house prices shoot way up. And all we had in every transaction was bidding wars. We had people overpaying for property. Now, once they got into that property, great, they have a low rate. So this is part of the problem that we're having now, is that with interest rates so high, has a lot of sellers, they're in a rate lock situation to where the interest rates that they have currently are so low that it doesn't make sense for them to go out and sell their property and jump right into the market of 7% interest rates.
That's right. Yeah, so sellers that have very, very low interest rates, they don't want to sell because they're financially locked into a less expensive mortgage. And so buyers are kind of thinking the same thing. They're like, why don't I just wait until rates go down and then I'll buy? And so we don't think that's going to really help them in the long run, because if you wait until rates go down, first of all, there'll be a bunch of other people competing for the same exact house that you want. There'll be more people that come in when the rates go down. Values will go up because there's more people. We just said supply and demand.
Right.
But also, let's say that takes about a year. We don't know how long it's going to be or how low they're going to go. We'll just, for this video, say it's a year. In a year, if you've already owned your house, values will go up. So you'll miss out on appreciation. You'll miss out on a whole year of paying your home down. That's called amortization, paying off your loan for a year. You'll owe less on your mortgage by paying it down. And tax breaks for a whole year. So people can keep renting for a year and just throw that money to their landlord. They already got a mortgage, but they're just paying someone else's mortgage, not your own. So flash forward a year, refinance from 7 to wherever it goes, call it 6, call it 5. People are forecasting 5. Save the money, tax breaks. It's much better now to buy now than wait for a year.
Because, again, it's just going to be so competitive once rates start dropping that, the same home that you want to be in, 15 other buyers want to be there too.
Plus it costs more. So you're paying more, and you're in a bidding war with everybody else who wants to be at this property. Because again, supply and demand. You really have to think about that. And as we start moving through these processes, what we really want to convey to you on the other side is there's opportunity when you purchase property.
Now, that's part of the American dream, to own something, to be able to pass something on to your, your family, generational wealth, if you will. And it's more rewarding, I would say, to have something that you can call your own and not have to worry about a landlord or something like that coming in and telling you, hey, you know what, you got a 30-day notice. You gotta go.
Yeah.
Or rent is going up this month.
That's another great point. Seriously, people sometimes think that buyers that don't have houses, they feel like it might be unstable or they're scared about buying. Mm-hmm. But what's really unstable is when you don't own the house that you're in and they could kick you out. So 100%. That doesn't happen when you own your own house.
Yeah.
And so you get the stability of the American dream. Also, you get to feel that ownership, and that is super awesome. And that's probably the most fulfilling part of my job, is like when you get to give the keys, I just get to go, congratulations. But it's just awesome to see people get that dream fulfilled. But it's also secure for their family, because, well, check this out. The mortgage doesn't change. That's the best part of a fixed rate mortgage. It does not change until rates go down. Then guess what? It goes lower.
It goes lower.
So it's way more stable than rent.
Right.
Rent is one of the biggest things that's subject to inflation. So inflation was raging. Guess what else spiked because of that? Rents. Guess what didn't change a penny? My mortgage, because it doesn't change at all.
And I think that's a great point you bring up as well, because I think that's something that kind of goes over some folks' heads, right? Is they think, hey, just like everything else is going through inflation, if I own a home, property, then I have to worry about my mortgage payments going up. But it's locked in for that 30-year mortgage. And on top of that, too, when you consider like purchasing a home, like there's everything else is going on in the world. Things happen. So I'm not going to sit here and tell you, if you own a home, everything will be all right. It's just not the case. I mean,
life happens.
Life happens. Yeah. You have your own circumstances. We have the world circumstances. Things happen. But in order for you to have some sort of security, have a home base, it starts with owning property. And along the lines of that is, there's different homes for different folks, right? And I think that's part of like an inventory issue as well, is that some folks are expanding. You have life situations happening where they need bigger homes, some need smaller homes, or some are just relocating. And so for a lot of folks that are like selling, for instance, if it doesn't make sense for them to go from one property to the next property, it's like a lateral move in this market, because it's going to end up paying more. They're going to end up paying more, I should say. And in order for you on that side, what you really want to think about is it feasible for you and your family? What is your long-term plans? Where do you see yourself? Everybody's situation is unique, and this is part of why you really want to sit down with local professionals like myself and like Matt, have a conversation, figure out what your goals are, what the plan is, and so that way you can be well informed. So Matt's going to have his contact information is down here on the screen, and of course you know how to reach me. And if you're a seller and you're thinking, hey, I want to sell my home, but you know what, I'm not sure of any of the possibilities, again, contact your local lender like Matt. He's going to be the one to go ahead and lace you up, and you already know what to do next. Make sure you like, subscribe, drop a comment, let us know what you thought about this, or if you have any more questions. And of course, make sure you ring that bell, baby. Peace.